Good day and welcome to this episode of the Sanlam Investments Fast Fund Fact Series. Joining me for this episode is Fernando Durrell. He's a portfolio manager, part of the absolute return team at Sanlam Investment Management. They do manage two retail unit trust funds, the Sim Inflation Plus and the Medium Equity Funds. Fernando, let's just jump right into this. Sim Inflation Plus, Medium Equity, what are the main differences between these funds?
Thank you, Gili. The Sim Inflation Plus Fund is an Inflation Plus 4 fund after fees, and our Sim Medium Equity Fund is an Inflation Plus 5 fund after fees. Both are absolute return funds, both target inflationary plus returns, but the Medium Equity Fund has a higher threshold in it being Inflation Plus 5, and as a consequence, it's appropriate for clients who have a broader risk budget, but still want to be able to achieve their target in the most consistent way possible.
You mentioned absolute return. Please explain this philosophy.
Well, the history of absolute return actually comes from something we studied at school. It's referred to as the absolute value. And really the objective historically was to be able to generate returns that equal the absolute value. So the only returns that equal the absolute value are positive returns, not negative returns. So that really was the objective, to be able to generate those positive returns, and as a consequence as well, reducing or minimizing the probability of negative returns. And that actually talks to the eighth wonder of the world as well. It's compounding, and you really want to be able to compound these positive returns through time, and that really is the history behind absolute return.
What would you say are the major drivers of return in these two portfolios?
Well, we're part of a broader multi-asset team. That's the absolute return and balance team, and really across the two teams, it's asset allocation that are drivers, stock selection, and then also risk management. And then those three components is how they interact with each other and how we then tailor that to an absolute return solution that provides the differentiating characteristics in our arena.
You mentioned risk management strategies. Please expand.
Yeah, so risk management can be probably split into two components. There's tactical asset allocation, where the objective there is to just adjust your asset allocation exposure around your strategic or long-term exposure. And the reason for doing that is that markets over and underreact all the time. And so tactical asset allocation allows you to manage that risk, but also to be able to take advantage of opportunities that do arise. But asset classes can do only so much, and that's the other part of our risk management strategy. We make use of asymmetric instruments referred to as derivatives, and that allows us to cut off those negative returns or left tail of our distributions without compromising too much return on the upside, and that really gives us our holistic risk management strategy.
Fernando, thank you very much. You unpacked a lot of technical info in a short space of time. Well done. And thank you for joining me for this episode. And to our participants, please look out for additional episodes of the Sanlam Investments Fast Fund Fact Series, where we will be covering our other capabilities.